Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Director of International Content, Emily Parker, and filing it for Lawrence today is Michael Casey, CoinDesk's Chief Content Officer. Good morning, you two. Great to have you on the show, Michael.
Hi, Christine. Good to see you.
Pleasure to have you filling in. All right, checking on Bitcoin, the CoinDesk Bitcoin price XBX index is currently trading at $44,882. Bitcoin is coming down almost 8% over the past 24 hours, and the CoinDesk Ether price ETX index right now at 34.74. ETH is also dipping about 6.6% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. And you know, we're seeing the price of the crypto markets go down. We're also seeing global stocks go down this morning. The tweet of the day is our top story of the day. It's from Tesla CEO Elon Musk. It's one word and it has everyone talking. It's a response to crypto whale, who's tweeting Bitcoiners are going to slap themselves next quarter when they find out Tesla dumped the rest of their Bitcoin holdings. With the amount of hate Elon Musk is getting, I wouldn't blame him. Elon Musk tweeting, indeed. He later tweeted to clarify speculation Tesla has not sold any Bitcoin, but certainly it has the Twitterverse and the rest of the crypto markets talking. Michael, we saw Bitcoin hit 42,000 resistance. What's going on?
Oh, you tell me. Like it's a lot of chaos at the moment. It seems to be something of a playground fight almost, right? It's got this feel of Elon calling out Dogecoin and then sort of like threatening to do things with Bitcoin, and Bitcoin is getting angry at him. It's not a good look. And I think that's kind of one of the aspects that's feeding into the price action.
Certainly. Emily, isn't it quite disconcerting that one person can have such an effect on the crypto markets?
Exactly. Yes, I totally agree that it's not a good look, because the whole point of cryptocurrency is that it's decentralized. That's why it was created. And yet we have this extremely powerful figure putting things, basically tweeting comments and moving the market. And this is happening again and again with Elon Musk. So one interesting counterpoint to this is Vitalik Buterin, the co-founder of Ethereum, actually decided to burn about $6 billion worth of SHIB tokens. And what's interesting is he did this because he received about half of SHIB's total circulating supply. This was clearly some sort of marketing or publicity stunt, and he burnt them by sending them to a dead blockchain address. And interestingly, it didn't really move the price. I don't know why. But the reason why he did this was because he didn't want to have that kind of power of one person moving the market. And he said, you know, if you want to send tokens, next time send them to a charity. So this is clearly becoming a repeating theme in the cryptocurrency world, that there are these individual figures who are taking on disproportionate power.
Interesting. Well, let's take a look at the crypto markets.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, joining us now to discuss the markets is Lindsay Ju in Investor Relations at BitBull Capital. Welcome to the show, Lindsay.
Thanks, Christine. Wonderful to be here.
Great to have you. All right, so would love to have your perspective on Bitcoin price, Lindsay. Is this a buying opportunity?
Yeah, I think that when we're taking a look, we have seen that Bitcoin has taken a slight dip, but let's also remember that it's still up about 40% from this time last year. So Bitcoin is still strong and definitely not going anywhere. I think if anything, this could be a mid-market stall. We have seen lower lows and higher highs since March. But I'm very optimistic. I'm optimistic that we're going to go back above the high of 63K, maybe even as soon as next month.
You know, Lindsay, the look here, as we said at the opening, is not a particularly good one for crypto, with this sort of fight going on with Elon Musk and the focus on energy and the like. I mean, is there any concern that the prevailing thesis we were looking at earlier in the year, that institutional investors are coming, may be harmed by this, that they're all put off by the kind of the fracas that we're seeing?
I think that is a concern. Certainly more institutional players are entering into the fray, but I don't think that that is time for concern yet, because we haven't seen saturation with institutions. Still, I mean, let's be realistic. Crypto is the best performing asset class since 2017, especially when you look at the US dollar, when you look at gold. And if you take a performance comparison with Coinbase's IPO in comparison with the performance of Facebook, Google, and Amazon, it's still really the clear winner. So I think that crypto still has a long way to go in terms of its potential revenue growth. Back to Coinbase, they have 56 million customers. It's a trading platform for both institutional and retail players. So I'm not worried. We continue to welcome people like Square, PayPal, MasterCard. So I think that the institutional players are just seeing its first wave, truly, and things are going to continue to grow.
Good morning. So even as I just complained that Elon Musk is taking on too much power in this industry, I'm going to bring him back into the conversation because he is moving the markets. What do you think he's up to? What do you think his end game is? Because, there's a lot of speculation about what his goals are. Like, why is he all of a sudden concerned about Bitcoin's energy problem, which is not even remotely a new problem? I'm just curious if you would mind speculating for a moment. What do you think he's doing here?
Yes, I wish that I had a crystal ball into Elon Musk's mind. Then I could perhaps be a very rich person. Certainly, we have seen a trend of Elon having a sweet and sour relationship with crypto Twitter. He has gone to say things that have boosted the market. He has gone to say things that have dropped the market. And he's also had stern warnings from the SEC, let's remember, back in 2018. So I think right now what he's doing is he's potentially making some plays. Let's also remember that he's a founding father in PayPal. So I think that he's doing some perhaps experimentations, but I wouldn't be too worried about Elon Musk. I do think that the blockchain world and the blockchain community is a much bigger whale than what we can see Elon move as just one person. But perhaps what he's doing is he's trying to make bigger room, not just for Bitcoin, but for alts. So of course we've seen his memes through with Dogecoin. And also, I think there could be a potential rise in DeFi and tokens. We saw a huge rise with Definity. So hopefully, I'm hopeful and optimistic that that's the play that Elon is making, is further room for alts.
Lindsay, but
since you mentioned alts, how closely correlated do you think alts will remain to the Bitcoin market? Like, I get this question a lot. Like, if Bitcoin were to crash, do you think alts will crash with them, or DeFi will crash with it, or do you see them kind of starting to move in separate trajectories?
Yeah, I absolutely see them as tied very closely together. I think that we have seen that Bitcoin has traditionally been the leader and alts have followed, but I'm very certain that we're going to see alts be a little bit more of a pack leader, and that Bitcoin will start to follow some of the trends, especially what we've seen of some of the highs and the market rallies behind Ethereum lately, and what's going to happen soon with ETH2 and proof of stake versus proof of work. So I'm very hopeful that it's not just going to be all about Bitcoin, and we're going to be making room for many of the alts to lead the way. But I do see them continuing, at least for the next year, to have a very close parallel stream.
So Elon has brought up this whole environmental and energy consumption debate to the forefront. Do you think that will be a concern for institutions as they look to invest into the crypto universe?
Yeah, certainly. I think people are looking for alternatives. It's something to consider, the sustainability, and that's why people are looking for alternatives. There's Polkadot, which is increasing interoperability, and there's also Definity, which now is said to have unlimited capacity and scale at an incredible rate. So as we're going to continue to see Definity and ICP, the internet computer, grow, we're going to see if that's going to continue to make space in the market at the same rate.
All right, Lindsay, thank you for joining us and offering your insights this morning.
Thank you so much.
Right, that was Lindsay Ju of BitBull Capital. Coming up, what happened in the Asia crypto markets overnight? Plus, the Bitcoin energy debate draws attention to the proof of stake blockchain model. We'll talk more with Wu of Ava Labs.
We are witnessing the greatest paradigm shift in finance in modern history. Join thousands of newsmakers and influencers talking the future of money at Consensus by CoinDesk. A live virtual experience of leaders, changemakers, virtual reality meetups, keynotes from Ray Dalio, Gary Vaynerchuk, and much more. Get an up-close look at the boom in crypto, the surge of institutional investment in Bitcoin, NFT mania, the breakneck innovation in decentralized finance, and the coming disruption from central bank digital currencies. Join us May 24th to May 27th for Consensus by CoinDesk.
for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, May 17th, 2021. I'm Angie Lau. Let's get you up to speed from Asia to the world. FOMO replaced by FUD in crypto today. Fear of missing out replaced by fear, uncertainty, doubt, or FUD. Around $300 billion worth of the global cryptocurrency market cap has been wiped off over the weekend. Bitcoin dipped to lows we've not seen since late February and early March. According to the Crypto Fear and Greed Index, which measures the current sentiment of the Bitcoin market and calculated by data aggregator BYBT, the current score is at 27. That's kind of low. The index looks at data from the likes of market volume, volatility, and social media and ranks it on a scale of 0 to 100. 0 means extreme fear. Sunday's score was 20, and it hasn't been 20 since April of 2020.
With regard to kind of like the positions people are holding, we are seeing more people holding short positions. So we kind of like in the past few months, we very rarely see a negative funding rate, but lately the funding rate for Bitcoin is constantly negative on our exchange. Bybit
added that a positive sentiment is being observed in their futures contract, though, which are still trading at a premium. And what did all that lead to? Well, Bitcoin down almost 8%, trading at around $45,000 as of 4 p.m. local Hong Kong time, the end of the Asia trading day. And in the top 10 for cryptocurrencies, no survivors here as well. Entire top 10 in red, including Cardano, down 8.5% after reaching an all-time high over the weekend. It's still trading above $2 though. But NFTs getting a boost. Do you remember this video?
Charlie bit me.
First posted to YouTube in 2007, the Charlie Bit Me video has racked up over 880 million views. Now, after 14 years, the family behind one of the first viral videos ever to hit the world, including Charlie and Harry, who are now in their teens, are ready to move on. They're going to be scrubbing the home movie from YouTube forever and turning it into what else? An NFT.
We're embracing something which is coming along, something which is new, in the same way we did back then.
The NFT will be auctioned off by Origin Protocol. Ironically, a handful of the company's team members were early YouTube employees, including Origin co-founder Matthew Liu.
There is a bit of this bittersweet feeling around the deletion of this video, but we think it's a very, very innovative way for the creators to make a decision as to what they want to do.
And finally this, who doesn't need a little holiday? We all do. Well, world-renowned artist Cause is taking his next project, Cause Holiday, to the sky over the UK. Now, if you want in on it, all you have to do is get your crypto wallet ready to go. What makes this one different from his previous holiday exhibitions, which have popped up in Hong Kong, Taiwan, and Japan? Well, in addition to the fact that his work of art takes you to the clouds in what organizers are calling one of the world's largest hot air balloons, it will also be the first time Cause, along with a production company he works with, Hong Kong-based All Rights Reserved, will accept cryptocurrency as a form of payment for the journey. The artist and his team have partnered up with FTX Pay, a crypto and fiat payment processor by FTX, which is, of course, headquartered in Hong Kong as well.
I think the behavior is changing into the art world, and I think this is a really great opportunity for us to make an experience out of it.
Taking art literally to new heights in more ways than one. And that's the Daily Forecast. I'm Angie Lau. Until next time.
Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XPX index is currently at 44,800 and change. Bitcoin is slumping about 7.7%, and the CoinDesk Ether price ETX index right now is at 34.56. ETH is also down about 6.8% over the past 24 hours. All right, taking a look at our spotlight.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Alternative coins and decentralized finance have been challenging Bitcoin dominance, and concerns surrounding Bitcoin's energy consumption have raised questions on whether altcoins can be more sustainable. Our first guest heads Ava Labs, a developer that launched the proof-of-stake Avalanche blockchain last year. Joining us now to discuss is John Wu, president of Ava Labs. Welcome to the show, John.
Thank you for having me, Christine.
Great to have you. All right, so Elon Musk, he's reignited this whole debate around Bitcoin and sustainability. So I'd love to get your thoughts on the matter and if energy consumption was on your mind when Avalanche was being designed.
It was. So the team at Ava Labs who designed Avalanche definitely had that in mind. It is, I think it's about 130 terawatt hours per year now that the Bitcoin ecosystem requires in terms of consumption of energy. That's about the same as the country of Norway or I think Argentina. So it is a lot of energy consumption out there, and not all of that is eco-friendly.
Hi, John. Thanks for joining us. There's a contrarian view out there a lot of Bitcoiners promote that is an interesting one, that in fact, the future may lie with Bitcoin being an underwriter, if you like, of the development of renewable energy, because it is truly, seeking the lowest cost of electricity. And I'm wondering, proof of stake in some respects doesn't have that capacity because it doesn't need the energy. It may not be the driver, if you like. I wonder how you might respond to that thesis.
That's right. I mean, obviously, renewable energy to power the Bitcoin ecosystem is better than using things like coal. However, proof of stake is actually a much better system. So proof of work really requires a lot of energy tethered to a lot of hardware in order to secure, validate, and to create the next block. What's even worse, though, with the whole Bitcoin mining situation is there's a lot of wasted work. It's not necessary. The way the validation and the creation of the next block is set up, it's a bunch of miners getting faster GPUs, faster CPUs, faster machines, and competing against each other, trying to win effectively a lottery ticket in order to create the next block. A lot of it is just wasted energy of miners competing against each other. Whereas proof of stake has now removed the concept of tethering the energy in order to validate and secure. What proof of stake does is it allows people to think of it as security deposits or collateral in order to be part of the network, to have a vote. And so you can take the existing coin and put it into a mathematical light software type environment and use that as your security in order to validate, secure, and create next blocks.
To change the topic for a moment, let's turn to Ethereum. Do you see yourselves as a potential ETH killer? And what's going to happen when we see ETH 2.0? Is that going to be a big challenge for you?
So Ava Labs, the team behind Avalanche, the protocol, and Avalanche, the protocol is actually Ethereum compatible. So developers can use Solidity to program just like you can on Ethereum. We actually view ourselves as complements to Ethereum. It really is hard to do things when there's $50 gas prices, especially on some digital collectibles that only cost $10. Who wants to pay $60 for a $10 item? So a lot of the stuff that they can't do right now, we can help out. So that's why the Avalanche protocol has actually seen an inflection point in terms of projects as well as transactions, and as well as a ton of users trying to experiment with different features and different capabilities. There are certain things that the Avalanche protocol has, like a lot of scale. There's over 1,000 validators now, no latency whatsoever, finality in less than 1 second, and of course, very, very cheap prices for transactions. 1,000, even less sometimes.
But with ETH 2.0, do you think that would challenge that advantage?
Well, ETH 2.0 and some things that they're trying to upgrade in their network is definitely coming. Question is when. And also, there's a lot of first layer coins now with lot of speed. I think your previous guest mentioned Polkadot and mentioned Affinity. I don't know if those are live like we are, or the Avalanche ecosystem is live with over 50 projects and a healthy, robust DeFi community building on top of it. But with that said, there's just way more capacity than there is enough room for one particular first layer going forward. It won't be like the first generation where it was just Ethereum winner take all. It'll be more like the social networks are today, more like a winner take most. There will be a Facebook, but you're going to see Snapchat, Twitter, TikTok, and other specialty first layers come about.
John, you guys advertise yourselves as servicing enterprise blockchain, and for some time, what enterprises, large companies were doing in the blockchain space was using permissioned networks, closed ones. Obviously, you and others are permissionless. Are you seeing companies now willing to take the leap and embrace this open permissionless system?
Yes, absolutely. Avalanche platform is set up so that you can have what we call subnets, and a subnet is effectively a private blockchain. And that private blockchain can actually very easily connect to the permissionless world. So Avalanche was set up so that it can have the best of both worlds. There are plenty of enterprises talking to Ava Labs, the company that's the service and software provider for Avalanche. And we're working with a lot of these enterprises. These enterprises are looking for workflow efficiencies as well as a technology improvement, and as well as thinking future in the future, so they want to future-proof themselves. You know, I really think in 5 years, maybe 5 to 10 years, having a blockchain power your ledger, so to speak, is going to be second nature. It'll almost be like the way AWS is. It just runs in the background. Enterprises won't even be talking about it.
Wow. Well, John, thank you for joining us this morning and sharing your insights. Appreciate your time.
Thank you.
Right, that was Ava Labs President John Wu. Coming up, it's your last chance to file taxes in the United States. How do you make sure your cryptocurrencies are being properly accounted for? And our daily policy and regulation update from CoinDesk's Nick Day.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Welcome, Nick. So we learned on Friday that Colonial Pipeline paid a roughly $5 million ransom in untraceable cryptocurrency to allegedly Eastern European hackers. Do we have an update on that?
Yeah, so according to Elliptic, that actually was paid in Bitcoin. It was about 75 Bitcoin. So hardly untraceable. Although, you know, if the entity that created the ransomware and deployed it used mixers or, you know, other services, it's very possible that it will be difficult to trace. But that's where it is. And now DarkSide, the entity that created the ransomware, is they say that they are shutting down. It looks like it may just be, you know, they're getting a lot of attention. They're in the limelight. They want to kind of rebrand, you know, get that spotlight off of them, and, you know, set up shop elsewhere without having to, you know, carry the same baggage.
Hey, Nick, you have your finger on the pulse, probably like very few others, in terms of the direction of where, you know, regulation and policy making is going. I'm wondering whether this particular ransomware attack, which is one of the more high-profile ones we've seen, is there any concerns that it might provoke a regulatory backlash of some sense against cryptocurrencies?
Yeah, I think that's the big thing because, you know, as everyone might recall, just a few weeks ago, there was this public-private partnership creating a ransomware task force that published a report saying, you know, crypto is a vector that helps make ransomware work because people can, you know, pay the ransoms using crypto. And the recommendations were to ensure even, you know, regulation around cryptocurrency exchanges worldwide. So the fact that this was such a high-profile ransomware attack, and even after that, after Colonial paid, the Irish Health Service is now facing a ransomware attack, and 4 subsidiaries of cybersecurity insurance giant AXA is facing ransomware attacks. I think there is definitely a legitimate concern that there will be more scrutiny around how crypto payments are being used. The Biden administration just last week also published an executive order around cybersecurity and addressing some of these issues. It didn't directly mention crypto or how these things are paid, but generally government advice is to not pay the ransom. So the fact that some companies are willing to pay just might bring further attention to what's happening here.
Nick, there's a crypto-related bill backed by Senator Lummis. Can you just quickly tell us what the status of that is and what the significance of it is?
Yeah, so this is the Endless Frontier Act sponsored by Senate Majority Leader Chuck Schumer. Last week, I believe it was last week or possibly the week before, Senator Lummis, along with Senator Kristen Sinema, added an amendment basically making distributed ledger technology a part of it. So what the act does is creates a technology directorate within the United States and gives it 10 or 11, they call it technology focus areas or key technology areas, that the directorate will create a strategy around and basically prioritize over the coming years. I believe it's the next 4 years if the bill is passed and signed into law. And because of the amendment, distributed ledger technology will be part of that. This bill will be debated tonight, and I imagine it's going to be passed. It has bipartisan support. It's been sponsored by a Senate Majority Leader. So it's very possible that by the end of the day or by the end of this week, the Senate will pass a bill that says blockchain is a priority for the U.S. to study.
Interesting. Well, thanks, Nick, for keeping an eye on the legislation for us.
Thank you.
All right, that was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. And today is tax day. It's your last day to file taxes in the United States without incurring a late penalty. For folks who own virtual currencies, it can be particularly stressful, as the rules surrounding crypto and taxes aren't always so clear. Joining us now is the Chamber of Digital Commerce Chief Policy Officer, Amy Kim. Welcome to the show, Amy.
Thanks for having me.
So, Amy, would love to hear, what is the most common misconception about taxes and cryptocurrencies? What mistakes are commonly made?
Well, we're looking at tax policy right now with one thesis in mind, which is that U.S. taxpayers need additional guidance in order to meet their tax obligations. It's as simple as that. We received, the industry received some comprehensive tax guidance back in 2014, and maybe a couple of more narrow ones along the way. But that was 7 years ago. And so there's lots of questions that still remain. Of course, we've been talking about on the show how quickly this industry's been advancing in so many different areas. And still we're stuck grappling with the ins and outs of how virtual currency treated as property for tax purposes, how that breaks down into some very specific obligations on individuals and on companies.
Do you think it's a mistake to tax crypto as a capital gains when it's being used by some as payments?
Well, it is an interesting thing to think about. When you think about tax policy, you can use it to drive social behavior, right? If you want people to own homes, you might give them a tax break on mortgage interest lending. So certainly when it's taxed as property for capital gain or loss, it does make it a lot harder to use it as a payment mechanism. Imagine buying a cup of coffee every day. That's 356 records that you're going to need to keep and figure out either on April 15th or May 17th, depending on which year you're looking at, how much you owe or don't owe in tax obligations.
Hi, Amy. We had news some time ago that Joe Biden is planning to introduce a significant increase in the capital gain tax generally. So not specifically a crypto policy issue, but one that is surely going to hit the pocketbooks of a lot of crypto investors. With your look at what's happening in Washington, what do you see the chances of that proposal getting through Congress?
Yeah, it is facing some headwinds. Certainly, as I said about driving social policy, if you do increase capital gains, I think the proposal is short and long term. So even if you hold it for over a year, your tax liability will go up. So I expect that there will be some pushback across industry, not just the crypto space, but everywhere. So I think there's a lot of things to sort out there and a lot of challenges that they're facing because they also have to justify the programs they want to fund with that tax obligation.
Jaime, it appears like recently that Brian Armstrong, Coinbase CEO, went to Washington and he was tweeting about it and putting out some photos. What is the significance of that trip? Is that an important development?
I think it's a great development in the sense that, we are seeing this industry mature. Very happy to see Coinbase going out and meeting with government just like we do. Basically, as at the chamber, that's our job, is to meet with them on a daily basis. And I think the more people they hear from, the better, that are developing different types of products and services, and so that government can see that they don't need, there are things we need to focus about, like ransomware payments that was on the prior segment, or tax liability, which is also a key component that I think needs to be talked about a lot with the government. For example, we're publishing 2 letters that we sent to the IRS talking about several areas that we believe are of primary concern that they need to address this year so that this industry can move ahead. So those are the types of things that we need to get the message out. We do, others do. So I'm glad to see that we're looking at a mature and sophisticated strategy towards engaging with our government.
Nick just mentioned a bill that would ostensibly make blockchain distributed ledger technology kind of more of a national priority. Do you think this bill is likely to be passed? And is this how significant is that for the industry?
It's very significant. It's an issue that we've promoted since 2019, which is essentially making the promotion of blockchain technology in the United States a priority. So we're really proud that Senators Lummis and Sinema are promoting this. You can see around the world, countries are developing proactive, innovative ways to develop the technology and use it to their advantage. There's so many benefits that, of course, your viewers all know. But, these governments are also embracing it. Here in the U.S., we're focusing on a lot of, illicit activity, which we absolutely should. But we aren't having that broader conversation of the positive benefits and effects that it can bring to government, businesses, and consumers. So I think this is a great opportunity. And, I know that the Frontier Act has a lot of support, especially from the majority leader. So it has a good possibility for passing this week.
That being said, Amy, you mentioned the Colonial Pipeline cyber attack. Do you think that there will be some sort of backlash from Congress on this ransomware?
Well, I think you need to understand all the facts, too. I've heard from law enforcement that they prefer criminals to use Bitcoin because it's easier to trace. Nick, raised some kind of some considerations there. But so I think if, as government understands how Bitcoin can be tracked and traced for the benefit of law enforcement, that that may alter that conversation. As in many things here, I think some of the facts and details are important and not getting, not looking only at the headlines.
All right, fair enough. Thanks for sharing your insights, Amy, and joining the show.
Thanks so much for having me.
Right, that was the Chamber of Digital Commerce Chief Policy Officer, Amy Kim. And that's it for First Mover. Coming up tomorrow is special guest Gary Vaynerchuk of Vayner Media. Thank you, Emily Parker, our CoinDesk Managing Director of International Content, and Michael Casey, our CoinDesk Chief Content Officer. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.